The stock market is currently down 22% from all-time highs.
I said, hold up, wait a minute, something ain't right.
And with that being said, we are going to be using ChatGPT to figure out when the bleeding will stop, when the stock market is going to bottom out, and when the best time to be buying stocks are for the flip back up to the upside so we can start making some long-term money. Now, right now, you're looking at a chart over the past 5 years of the SPY, which is the overall S&P 500 ETF, which tracks the top 500 companies in the US stock market. And with that being said, we have 4 highlighted bubbles right here. Bubble 1, Bubble 2, Bubble 3, and Bubble 4. Bubble 4 is where we're currently at in 2025. Off of our highs of $613, we have fallen all the way to lows around $475. That right there is about a 22% drop in the stock market. And that's about within a month, I would say. So that's a pretty quick drop and a pretty massive flush to the downside. This next bubble over here is back in 2023 from about July until October, November timeframe. This right here was not as massive of a pullback. It was only about 10.5%. And it was over several months, so it was a little less serious, but it was still a pullback to be noted for. This next pullback here from the top of 2022, back in January, all the way till about October of 2022, we had a massive 27% flush to the downside. Just a massive pullback throughout the entire week where we could not break above this simple moving average line and continued making lower lows. And then back here during COVID, obviously, as you know, 2020, trading at highs around $340 at the SPY, dropping all the way down to lows around $220. That is a 35% drop in the overall stock market. And that happened within about 2 months at most. So we're looking at a comparable level to what we were seeing during COVID. But with that being said, we saw the exact opposite happen where we saw the stock market bottom out. And once it bottomed out, it rallied for literally a year and a half, moving 114% higher. Will that happen again? Probably not, but there's a possibility that it definitely could. Now, with that also being said, something you want to take note of is that if you bought at any time, even if you bought at the top of this before it dropped, or the top of this point before it dropped, or the top of this point before it dropped, you would still end up positive now. So if you're trying to hold off and wait for the stock market to bottom out, take a look at any one of these 4 drops, because you'll notice that every time these stock market crashes happened, you could have bought in at the top right as it was crashing, the middle, or the bottom. But it doesn't matter because in 3 to 5 years, you are still positive on your investment. And going back in time, you can still use that same exact ideology. Back in 2017, 2018, where we saw some massive pullbacks to the downside. 2019, where the stock market was at $230 the SPY. If you would have bought in any time during this time period and held it for just a year, you would have still been up higher. 2 years, 3 years. And now looking 6-7 years later, you would have tripled your money. And you could have bought it at the tippy top or the bottom of that crash. So with that being said, that's also something you really should take into consideration, is that trying to find the bottom is pointless unless you're trying to day trade or swing trade or make some type of short-term play to make some quick cash. If you're just strategically trying to play this out to just get into the stock market to invest and get at a good deal, now is a good deal. Now is a good deal because if you take this looking chart right here, now I know we've had a strong past 5 years, but if you take this and convert it to the next 5 years, you're going to see that money no matter if you buy it at $470 like it was at around today, or back up to $500 or $550, you're going to see those returns potentially double in valuation in the next 5 years. And it doesn't matter if you bought it all the way at the tippy top or bottom. Obviously, you want to get the best deal, but buying in increments and dollar cost averaging is probably your best bet in this situation. So that's what we have dealing with at least this stock chart right here with the overall SPY, and just taking a look at where we've seen the last drops over the past 5 years, how we've recovered every time, and how you should not be panicking, because even though this is a sharp decline in such a short period of time, we've seen stuff like this happen before in the past, and we've recovered and we've moved higher and we've regained control. And that's what you got to keep telling yourself and basically just trying to ignore any negativity out there. Now, with that being said, taking a look at ChatGPT, I asked it, based on stock market crashes over the past 20 years, so a little bit longer of a time frame, how long do they normally last, how long will it take to recover, and how much money will I lose? And of course, this is a great question. This is one of those things that investors think about but rarely get a simple real-world breakdown, and this is very, very true. So let's break this down real quick. Crash number 1, crash number 2, and crash number 3. 2008, the peak to bottom breaks it down 17 months. So that was the big one. That was the financial crisis, the housing crisis. Time to recover was 4 years. So it did take quite a while. Down 57%. The housing bubble and bank failures. A massive crash. This was a long-term period where the stock market was down for several years. But it eventually recovered. Same thing with COVID, but in a shorter time frame. Time to fall was only about 1 month, and it took about 6 months to recover, down that 35%, and obviously the pandemic panic, and the fastest crash ever recorded. 2022 was the bear market. 2022, January to October, 10 months, down around that 25%, and that was due to inflation and Fed rate hikes. So what does this tell us? Well, on average over the past 20 years, crashes lasted 4 to 17 months. It's a really wide range. And same thing with the recovery, 6 months to 4 years. Like that's insane. Losses range, though, minus the 2008 financial crash. If I just took the past 10 or 15 years, stock market crashes only last anywhere from 3 to 8 months on average. So it's not a bad statistic. So how much money will I lose? Well, if it's a mild correction, 10 to 20%, your 10K turns into 8 or 9K. A typical bear market, which we just currently haven't jumped into, which is anywhere from 20% down to 40%, that is a little bit beefier. That's where your 10K turns into 6 or 8K. And a major crash is 50% or more, which we haven't seen in quite a while. But if that does tend to happen, you could lose 50% of your money. That 10K turns into 5. But here's the key thing. If you don't sell during the crash, historically, you haven't lost. You're just waiting. The worst losses happen when people panic and sell at the bottom. And that is 100% true, because if we take a look right here and say to ourselves, all right, even if we sold right now, we would have lost a lot of gains. Technically, we would have lost, if we go back from where we're trading at right now, basically all of 2024's gains wiped out within the past 2 months. An absolutely insane statistic. But if you take the bottom at this 480 and you go back, this takes us back to December of 2023, before 2024. And that was 27% of a run that we had. And then now we just lost about 22% of that within the past 2 months. So that's something you really have to consider, is it's not the safest option to just panic sell and then hope that you buy back in at a lower price. Because technically you haven't lost anything yet. Those losses and those gains and whatever's happening throughout the day, nothing's happening until you sell. So if you had $10,000 invested in the S&P 500, 2007 dropped to $4,300, but by 2013, you were back to that $10,000. That's a long time period though, and that could happen. But by 2024, it was worth $32,000 plus without adding any money. So how long will the next crash last? Nobody really knows, obviously, yada, 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 but the fall, 6 to 18 months, recovery, 1 to 4 years, loss of 20 to 50%. The final takeaway is, which is very, very interesting to me. If you stay invested in a diverse stock portfolio, crashes hurt temporarily, but long-term wealth grows. Time and the market beats timing the market. We've seen that. We've talked about that. We've discussed how you can't try and guess where the top is, where the bottom is. You just got to continue to dollar cost average, DCA, and just basically continue to add whether the stock market is down or up, because in the long term, that is going to best help you. Now, what I asked is, what is considered a bear market? And mainly because a lot of people are saying to them, all right, is this genuinely a bear market? Are we actually in a bear market right now? Or is this just a stock market crash? Is this some type of just negativity right now? Well, technically we did just enter a bear market, because a bear market is anything that's 20% or more from recent highs. And that's kind of where we're currently at. Things are rough. It's a sustained downturn. It's a bear market. We're not in a crash yet necessarily, but we are in a very, very strong bear market. So what triggers bear market? Inflation spikes, recession fears, high interest rates, global crisis, wars, pandemics, overvalued markets cooling off. These are all checking our boxes. We have inflation spikes, we have recession fears, we have high interest rates, we have a global crisis right now with the trade tariffs, and then overvalued markets cooling off. We've been on a insane bull market run for the longest time. We're just cooling off. So with that being said, bear market, 20% or more drop lasting months to years, but historically recovers. That is something that you should just take into consideration when looking at the market and where we're currently at right now and where we've been in the past. We've seen this story. We've seen it happen before. Your investments are not over. The stock market is never going to recover again. It is going to come back eventually. And watching this video in a month from now, 3 months from now, 6 months from now, it's going to be the same result and the same answer and the same questions. That's why this video, you can watch this in 5 years from now in 2030, and me saying if you bought right here at 470, you're not going to make any money and you might have not bought the bottom. Well, it doesn't matter, because in 5 years from now, that bottom may be $1,400 or $1,500 or $1,600. This could be the start of a massive sell-off, or we could be at the end of this massive sell-off, and that was it. We don't know, but in the long term, as long as you're not looking to take that money out or need it or use it for any type of purpose, it doesn't matter whether or not you're buying it now or buying it 2 days from now or 3 days from now or 5 months from now. You're buying it at a better deal than when you were buying it back at the top. So at the end of the day, you just want to be able to dollar cost average, buy the dips, and we just discussed we are technically in a bear market, so I think it's a perfect time to invest. But again, this is just my personal opinion, so make sure to do your own research and due diligence before jumping into any stocks. This was me just going over the SPY, which is the overall S&P 500. I do recommend investing into some sort of SPY tracker, just so you can get the most diversified, and that way you're not putting all your eggs in one basket. Guys, let me know down in the stocks. Let me know down in the comments down below what stocks you guys want me to go over next. If you guys have any questions, comments, or concerns, drop them down below as well. And I'll see you guys in the next video. Don't forget to hit that like button and subscribe. See you guys next time.